Hi, welcome to my channel where we question everything. Today's topic is bits and pieces, and I would like to talk about, well, the heading is basically Bitcoin and the collapse of the FTX Exchange. Well, if you haven't heard about now, FTX was a cryptocurrency exchange. Basically, it traded mostly in derivatives. You can call it a derivative trading platform. And it apparently was launched about in May 2019. The founder of this crypto exchange is basically called a man called Sam Bankman-Fried or something like that. Funny name. But in any case, seems to me he was some sort of cowboy type of investor or trader on a stock exchange, and he tried to do arbitration between various exchanges and were quite successful in the 2018s and a little bit earlier. And then he created the company called Almeida Research, and then later on developed or established the FTX trading exchange. Now, what it is effectively, it's not a pure trading platform like you buy and sell crypto coins and the exchange has a lot of them. No, it's not like that. What it does is it trades derivatives, put options, leverage certain investments. And basically what you do is you put Bitcoin or some other funds into account, and then you can basically speculate against the trend on the pricing of Bitcoin and other crypto coins as well. And if you understand what is derivatives and what you understand is what is leverage and so on, that is like a seriously dangerous type of investment vehicle. Basically, you're playing the casinos. And with these type of investments, you can lose everything. Well, there were a number of advantages that were sold as for this crypto exchange, and especially basically the big names that invested initially into the firm. The initial venture capital was more like $2 billion worth. So that's a hell of a lot of investment, venture capital. And that should have raised your hair some time ago. Now, I've been involved in Bitcoin. Well, the first time I believe I heard about it in 2012. I still was able to mine a couple of Bitcoins on a GPU. But very soon afterwards, sort of specialized equipments, ASICs, had to become necessary to be successful, and then the whole mining system went out of the ordinary person's back pocket, if you want to call it. So I missed the big boom at the initial phase, but I got the tail end, but that's fine. It made me interested in the Bitcoin universe, if you want to call it, and I am a big believer in crypto coins and the blockchain technology, and well, for what Bitcoin was initially created for. Unfortunately, and the FTX is only a part of this type of this video today. The people, well, Sam Bankman-Fried or whatever his name is called, got a bit light in the head. At one stage, he was worth about $16 billion. He's 30 years old. Typically, couldn't handle the money. Made some funny decisions. Threw it all over the world, trying to promote his video. Now, let me tell you, if somebody goes like that, I think he mastered the art of bullshitting. Because I've seen a lot of bullshit in the crypto market. These days, still new coins are created, but the favorite of these days is like tokens. on top of chains like Ethereum, etc., smart contracts, and etc., and etc., and etc. And it is written, so if you read these white papers and if you read the web pages, it's such technical jargon that it amazes me that anybody understands. And I sometimes was wondering if the people that actually compiled this junk understood their own type of tokens that they were creating in the system they were creating. Now, wouldn't say I'm highly intelligent or genius and so on, but I have a fair amount of intelligence. Well, in fact, I had a master's degree in engineering, so that should say something. And IT is my passion since the 1980s. So I'm supposed to be knowing what's going on. I am supposed to understand it. But I'm sorry, I don't understand it. Never could understand all these tokens and all this hype that was created, etc., etc. And, well, we had several crashes of financial institutions along the way over the last couple of years, and even before that. These token companies come and go. Nobody understands what they are trying to do. They basically so flooded the market that it would be incredibly difficult for any investor to really make up a plan or decide on what coins are valid or not. That would be a huge enterprise effort to do that. And then naturally people like these guys come in, make a big hoo-ha. They are successful at the beginning stages. If you read up, I will leave two links. The one is basically a short description of what the FTX Exchange was and what the FTT token was. It's listed on the CoinmarketCap website. It's quite informative. And then there's also a technical a link to a news article which totally describes on why Sam Bankman-Fried basically effectively stole the funds. You can say whatever you want to do. He stole the customers' funds. He made a lot of bad decisions in investments and wasted all those people's amount of money. And thereby he lost his own money as well. For me, it's basically nothing more than a criminal. Because he has transgressed his own company's policies as well as the American SEC rules. Although they might not be bound by it, but I'm sure the US government will look to it. Well, I don't know where he is. There is some rumors that he flew to Argentina, but I'm not totally sure about it because he's not really that important. What I would add basically this whole FTX saga is a criminal enterprise. There were basically some rumors in newspapers that money was laundered to Ukraine or from Ukraine back to the Democrats and the Republicans. The US government will send funds to Zelensky. They will take a percentage and buy back or buy a number of tokens on the exchange. And then, Sam Bankman-Fried, whatever, type of would take that money and then give it back to the Democrats in the form of a kickback, and apparently the money is about $40 million, which I don't see that enormous, but well, I might have a skewed perception on what is a lot of money and what's not. So don't take me don't take me at face value. Better. Well, I don't know how the people thought. Bitcoin is anonymous. It is private as long as you stay on the blockchain. As soon as you address your Bitcoin address or whatever token address is associated with a physical account like a bank account or a trading account or whatever you want to call it, Then the owner of that address is exposed and identified, and then basically you can follow and trace all the transactions that that specific account has done, and all the other account numbers that it was involved with, and it is an open ledger. That's what the whole point is about with Bitcoin. Now, there are other coin systems that do hide the owners. A typical one would be Monero, the crypto coin Monero. So there are means of doing it, and then there were washing machines sites that would wash certain amounts from certain accounts, so it will sort of anonymize the whole process. But for some other reason, people didn't, at the FTX or at Ukraine, didn't consider these measures and openly transferred money back to that, and well, we know the rest, more or less. So at the end of the day, FTX, a derivative exchange, collapsed, and that is a fact, and that's when we're going to stop with this story. And now we come actually to the main part, and that is Bitcoin. Now, like I said, I'm a big supporter of Bitcoin per se, not the coin itself, but it is the most dominant coin, and it gathered the most investment in it, etc. and etc. And it's also most traded. But it has a lot of lacks a lot of features, and the main feature is probably the low transaction period, the 10 minutes to complete a blockchain, and thereby 10 minutes to enter certain transactions, and also the limit of this amount of transactions that can be executed in this 10 minutes. So it has some benefits. Changes have been promised for us for a couple of years already to solve these problems. And then we had Lightning networks and etc. and SegWit 2 and then we had forks of the coins where Bitcoin Cash and other coins where we had a lot higher transaction rates per second, and so forth and so forth, and all these tricks that were done to Bitcoin, the current Bitcoin version, is off the chain. Now, if it is off the main chain, then I ask myself, what the hell are you doing and why are you doing it? Because you are supposed to stay on the chain, because one of the technical features of the Bitcoin protocol is precisely the blockchain. So basically what these guys, developers, have done is they have now sidelined the issues, gone off the main blockchain, created a lot of other confusing items and data that had to be stored, and etc., etc., and etc. And basically it's a quite complicated world, technically, if you want to think about it. But it's also that the people that run it and that control it make it complicated. It doesn't have to be like that. But, so why was Bitcoin established in the first case? Well, we all know that you have money. Well, we need money in the world. In the old days, we had barter trading, and where we exchange, say, a cow for 10 sheep and so on. But if the guy only wanted half of the cow and he had 5 sheep, then we can't cut the cow or the bull into half. It doesn't work like that. So there was a need for something that we can consider as tradable, and we can use as an exchange, and we can swap out so that we don't have to cut the cow or the bull in half. And that is what we called money. Well, money we all know, were silver coins, gold bars, items of gold, diamonds. You can use, then we have paper money, the fiat money. And they all worked. And in principle, in a perfect world, it all is perfect. But unfortunately, the world is not perfect. Even silver coins were sometimes diluted with more copper. And therefore, it didn't contain the same amount of silver anymore. And that's how fraud and stuff like that was established or created. Or they cut the coin a little bit smaller and then melted the rest and so on. So they even manipulated that and didn't become stable. Or there is no real trust. There's no insurance that there is trust between two parties that agree to use a certain medium of exchange as a monetary exchange or a value, exchange of value. In any case, we all know about the fiat currency, where the most prominent one, and most well known, is the US dollar. Now, as long as the US dollar was still bound to the gold, which was established after the Second World War, there was a real balance in terms of the value of that piece of paper. You could have changed $1 for so many ounces of gold. It was and gold has been used as a medium of exchange over, well, they say 5,000 years. So, but I'm not sure. Maybe it's true. I don't know. I'm not a historian. In any case, but people considered gold. Gold was limited. Gold was stored in certain places, but gold couldn't be traded easily between people. Like I said, with the silver coins, etc., and etc. So the dollar was exchanged, which was a piece of paper, which was basically an IOU, which you could have changed for physical gold. And then we all know in 1972, Nixon took it off the gold standard because why? America spent too much money on the Vietnam War and had too much debt and had to pay it back, and there wasn't enough gold. And when France wanted to exchange the dollar for its gold, Nixon said no. And then we went dollar off the gold. Now dollar is just a pure fiat money. No more backing, no more type of support. But like I expressed in my other videos, it was so distributed in the world and so part of the international monetary or financial systems, it stayed there due to its weight. And then what did the Americans do is they were printing money, and by printing money they exported, because everybody was dependent on it, they exported basically the inflation to the rest of the world, and the rest of the world financed the lifestyles of the Americans. And well, I discussed it in a different video, but that's not the point. The point here is, again, is that now we had a fiat system whose value can be manipulated and whose availability amount can be arbitrarily manipulated and increased or decreased, which seldom happens, by a government, or no, not a government, a private central bank, because the American Reserve Bank is a private institution. It's not a government institution. And the whole financial system has been rigmarolled. And that was the reason, and therefore we had inflation, and therefore fiat money could be abused, and it created a lot of problems. And that is why Bitcoin was created in the first place, after the 2008 financial crisis, where the banks started to start QE, quantitative easing, printing money, bailing out the banks at the cost of the citizens of America. And that is why Bitcoin was created. Bitcoin has a technology where you cannot fudge the numbers. You cannot change the blockchain. You cannot create or steal money out of the blockchain without the necessary permission. And I can send you something, we can have a transaction, and you can trust me that, no. You got to be careful about this trust. The trust lies in the value of the transaction. not whether I am honest enough to send you the money. That is totally different trust. But there's no third party involved that verifies that this transaction has occurred. That type of trust. Currently, we use banking systems. If I owe you something, I can give you a check or a credit card slip or whatever I can send it. You deposit into your bank verifies the transaction and then only gives you the money. So there's a third party involved that verifies the transaction. In Bitcoin, there is no such thing as a verification. The whole system is a verification, and it cannot be gained, if you want to call it. So whatever stands on the blockchain is the true thing. And then there was another thing, is that there are only 22 million Bitcoins. It cannot be created more than that. It cannot be manipulated by anybody by doubling it and so on. There is only and will ever be only 21 million Bitcoins. Not all of them have been mined, and not all of them are actually available, but that is what they are there. So technically, the idea is brilliant. Yes, there's a lot of type of criticism. You gotta mine it, and it uses so much electricity. But then the pro-Bitcoin people always say, but think about all electricity that the banks are using to run their computer servers, to run the ATM, to run all the other networks. The bank uses a lot more of electricity power than the Bitcoin mining network. So that's not even an argument. Yeah, it's complicated. No, it's not complicated. There are a lot of wallets that are very easy to use and electronic. And by the way, our shopping, listen here, I live in South Africa. Our grocery store, Pick n Pay, has just announced that we can pay with Bitcoin. Don't remember that, in South Africa. So it does use us. But something bad happened. Apart from all, okay, third one, the third point is, yes, you can lose your wallet, you can lose your secret code, you can lose it, but you also can use your monetary wallet. Somebody can still hack into your bank account by phishing and using your password, which is regularly happening. And sometimes you even give your money to fraudulent Nigerians who scam you out of the thing. So, money can always be stolen, so forget about that issue. But in any case, apart from the technical problems that Bitcoin experienced, and in my opinion, will never be rectified, there's actually, I just want to mention, there's one big problem with Bitcoin. Apart from all the other technologies, technical problems, there's one big one. And that is when Bitcoin started the revolution. Bitcoin was the first crypto coin. When it started off, people didn't realize what they had in their hand. A Bitcoin was worth less than a cent. There's even a story where a pizza was bought with 10,000 Bitcoins. And there's also a guy in England that threw away his hard drive and lost about £3 million worth of Bitcoin. And you can hear all these other stories where it was destroyed. At the time where Bitcoin didn't have much value. Now, it is a well-known fact that Bitcoin, if you look at the blockchain, there are a number of addresses where no funds have been moved over the life of the Bitcoin protocol, the blockchain. And in they believe it belongs to the original founder of Bitcoin, that's his wallets, and that he hasn't moved them, that he's waiting for something. No, I don't think so. The amount of Bitcoins that are in these wallets that haven't been moved have been lost. Those are gone. Those Bitcoins will never be returned to the pool. They will never be traded again, ever. So instead of having 21 million Bitcoins, we maybe have only, I don't know, maybe 15, 16 million available ever. the rest are gone. Because just remember, if you lose your wallet address, that Bitcoin is forever gone. Forever. Not from you only, from the whole network. But in any case, so now we come to the big problem. The people that started with Bitcoin wanted to get Bitcoin distributed over the whole world, and they wanted it to replace fiat money, and they wanted to replace all money in the world and use only Bitcoin as a form of exchange, which is a valid goal. Make no mistake, the goals were excellent, no problem. But unfortunately for that, they had to sell their soul. A lot of governments were against Bitcoin at first, and there were lots of restrictions and legislations and delays and etc. and etc. And then the Bitcoin founders, or whoever was pushing it, the financiers, the investors, whoever you want to call it, they decided to sell it to the financial gurus in Wall Street and across the world in order to make money. And then Bitcoin became financialized. Bitcoin, that was supposed to be a payment scheme, was not in the payment scheme anymore. It was now an investment vehicle, and a very high speculative investment vehicle. And there are a lot of Bitcoin, pro-Bitcoin punters that still argue, yes, Bitcoin is gold and the storage of wealth and so on. No, it is not. Not if we look at that it has decreased by 60% in the last year alone. It's not an investment vehicle. It's not a storage as well. It is a financialized item that is currently being abused by the big boys on Wall Street or wherever they sit. And the reason why I'm also saying that is that you can go to CoinmarketCap. Just let me get this sketch up. Here's basically, oh sorry, it was still FTX. Here's the crypto prices per market cap. You can see here Bitcoin, Ethereum, Ether, US coin. But look on the right hand side where you have the nice graph. Just remember the shape of the Bitcoin trading graph. And look at all the other coins. Here there are exceptions. Yes, but they are all more or less following the same shape. Doesn't matter really what coin you are talking about. They all follow the same trading platform of Bitcoin. There are some changes, but these are usually more newer tokens and coins that the novelty still hasn't worn off, or there's some special yes. But in general they fall more. That means that every single coin or token is still bound by the price and fluctuations of Bitcoin. And that should be the telltale sign. Ethereum is not a crypto for exchange of value. That's not the function of Ethereum. Ethereum is basically a computer program that runs code in order to make, I think they call it non-fundable contracts, or I don't know what that name actually ever meant. But the point is here, you can write software or routines that create a contract on the blockchain which you can never change. And you can go back, and I wanted to show Ethereum, Monero. Oh yeah, here we have our favorite doggy coin, or Elon Musk investment. And XRP, well, I know why XRP is trading, because the use of that token is absolute zero zilch, because it doesn't work like that. Where is Monero? Oh yeah, here we have Monero. Now Monero is a totally anonymous type of coin. it has its own technology, it has its own features. It's not a Bitcoin. It doesn't have the same type of technical problems as Bitcoin has. But still, if Bitcoin goes down, Monero goes down. And so does Bitcoin Cash go down. And, well, in this case, it wasn't that much, but went a little bit against the grain. But if I look at it now, about 10 months or a month, then they would be the same type of graph. This is a 7-day graph. So none of the crypto coins really has detached from Bitcoin. And because Bitcoin is financialized, and you can trade most of these, you go to a lot of crypto exchanges, there's always pairs that you can buy Ether by spending US dollars, or spending Bitcoin, or spending Bitcoin Cash, or whatever other pairs there are of trading pairs. And what you will find is that the whole cryptocurrency is just a pure, plain speculative enterprise. There are still the true believers that try to establish crypto coins as a means of trading in the original point. Yes, there's a lot of support for Bitcoin as well. But I just would like to define a word. Bitcoin has been captured by the financial institutions and investors and the manipulators and traders and the bad people. You can call them really the bad people, because those people, the same people, were the reasons why Bitcoin was created in the first place. So, what will happen to Bitcoin? Is there a future in Bitcoin? I don't know. Bitcoin has been profited to be destroyed so many times. Bitcoin should have gone to zero so many times. But it hasn't been destroyed. It lost a lot of value, but it's still on $16,000 or $17,000. That's no small amount. So technically, Bitcoin will probably not disappear. And why wouldn't it be disappear? Because it's being financialized, and because it's so volatile, and everybody is speculating on it. The people that are actually doing the work will, at the end of the day, destroy themselves. They will work against each other and destroy themselves. Because the people that actually created Bitcoin will continue pushing the technology and continue expanding the use of it until a point where financialization hopefully won't have that big effect. I just want to, the point of this video was just to make this point available to you. I won't buy Bitcoin per se just to invest it in the future. I won't risk my money, because at this stage it's speculative. And I am not an investor, I'm not a trader, and I cannot see the peaks and the valleys. I don't know when to buy and when to sell. I have done it before on our South African stock exchange, and I lost money. Because traders in the end, they are the sheep herders and we are the sheep. But it's still going to take a long time. I consider cryptocurrency as the same as the internet. The internet was established, we first had bulletin boards, then we had the internet, then we had text browsers, then we had Netscape, and Netscape finally disappeared, and then we had 2001 a bubble, IT bubble, or whatever you want to call it, .com bubble, and then it burst, and now we are sitting basically 27 years later, and we have a proper internet. So maybe Bitcoin will also take that long to be established and accepted. It is progressing slowly. It might disappear and be replaced by better coins. But to be honest with you, NFTs, no value, junk, big scam. You can look at it whatever you want to do. Bitcoin has its problems. It probably will disappear and be replaced, hopefully, by better coins. And I'm not pushing Monero. Monero has only one point. There's Bitcoin Cash and other stuff that is much higher transaction capability per second, etc., etc. Blockchains are smaller. The Ethereum type of network, there's also EOS and I think Tron, I'm not totally sure. Those are very similar type of networks where software can be written on top of it, but Ethereum also has its technical problems. It cannot scale and it cannot transact all the amount of transaction that is required. It's also centralized to a big part, which goes against the grain of what cryptocurrency should be about, decentralized. But these coins, these crypto coins must remove themselves or try to get away from the price of Bitcoin and the manipulation, unless they believe that is the horse that they should ride, until they can't get any further. And I wish people will stop with this creation of tokens on the Ether network, and everything is financial. How many of these stuff still do we need? How many of these stuff is still going to be... At the end of the day, there's a place for maybe 6 or 10 of them, but we have like 500 of these things and more. Who's going to survive at the end of the day? Whoever invests in these tokens will, at the end of the day, lose it all. Again, you could see the effect of the failure of a crypto exchange on the value of the crypto coin Bitcoin. That should never have happened if it was a true type of investment. So hopefully I said gonna open a little bit and think a little bit about that. Don't throw away Bitcoin. That's not what I'm saying. But look the facts in the eye and then decide for yourself. In any case, that's my story for today. If you like what you heard, subscribe, share the link, tell your friends. Until next time, cheers.